Right, so good afternoon everyone. My name is Andrew Cairns. I'm one of the actuaries in this department, and I have a great variety of interests, which includes also financial mathematics. And so what I'm going to talk about this afternoon is just to give you an introduction to both of those potential career paths, financial mathematics on the one hand, or actuarial mathematics and actuarial science, which possibly most of you are thinking about studying. I mean, maybe I can take a show of hands actually before I get started. That put your hand up if you're applying for actuarial mathematics. So just about everyone. And put your hand up if you're applying for financial mathematics. So there's a couple of people, but also for those of you that are going through the actuarial degree or applying for that doesn't commit you to an actuarial career. Financial mathematics as an alternative career path will be open to you at the end of this degree that you're applying for. So, as I say, I'll talk about both of these career paths and perhaps try to contrast the two types of careers that you might take. So, actuaries themselves, they've been around for a very long time. As a profession, it's over 150 years old. As a type of work that you can do, it's been around for rather longer than that. That contrasts with financial mathematics, where it's in some form has been around for about 100 years, or a little bit more perhaps, but the subject area and the specialism has really come into its own in the last 20 or 30 years due to the development of some new and very sophisticated mathematics alongside developments in computing technology. So it's the financial maths that I'll concentrate on for just a few minutes, and then I'll spend a bit more time talking about the actuarial career and how that fits alongside the university degree. So where do financial mathematicians work, first of all? So the sort of headline type of job, the thing that most people would be aiming for, is working for a large international bank, say JP Morgan as one example. But then there are lots of other places where you can follow this type of career, so investment institutions, and then also in insurance companies. So that would be typically working within the investments department within that company, but perhaps also working in the more actuarial division, but doing some of the more heavy-duty financial mathematics. So what do they do, apart from just having a title of financial mathematician? So first of all, it's about what are the subject areas that you might study at university, what subjects are relevant, and there's quite a variety. Mathematics, probability, statistics, these are the sort of mathematical sciences skills, but then also a very important part of doing a good job as a financial mathematician is knowing about the context. So in other words, needing to know not just the maths, but also things like in economics and in finance. And it's then applying these technical skills to problems in investment analysis, risk management, and also the pricing of financial products. And increasingly, these financial products are becoming more and more complex, and so it is up to the financial mathematicians to help to price these contracts and then manage the risks that ensue. And of course, if you look back 3 or 4 years to the credit crunch, it was clear that some of these financial products became too complex and people didn't really understand so well. So there is a role in the future for financial mathematicians to help to manage the next generation of products that are going to come along. So some of the types of work that I've just talked about, these do require very highly specialized mathematics, and this has earned the nickname for the financial mathematicians. Some people call them rocket scientists, and partly that's because in the early days of financial maths, the mathematics that they were using was actually coming from branches of rocket science and the same sort of maths that was being used there. And if you're very good at that particular skill, that particular use of mathematics, and combining it with the practical business experience, if you're good at that, then you can be extremely highly paid. So just to give one example, suppose that you're a fund manager of a large pension scheme. It's maybe got assets of £5 billion. That's quite typical for the larger pension schemes in this country. Financial maths, one application of that is in the risk management associated with the pension scheme. For example, you've got a lot of different stocks and types of investment that you can go for with that £5 billion. So one of the things that financial maths will tell you is that you should be diversifying your portfolio of assets. In other words, don't put all of your eggs in one basket. Have a wide range of investments in different stocks and shares and bonds. And it's all about trading off risk on the one hand, where you can get high expected returns, versus the returns. So higher risk means that you can get higher returns typically, but of course too much risk is dangerous. And of course on the downside, and this is the risk management element of it, is one of the questions that you're asking as a financial mathematician and as a risk manager is, if things do go wrong, how bad can they get? And that's a very important question to be asking. It's not just looking at how good things might be, it's also thinking about how bad they might get if you do a bad job. I'll move on now to talk about the role of an actuary. So what do they do? So the bullet points that I have here, these are the sort of popular conception of actuaries. So they earn a lot, work in insurance, and they use mathematics. So those are the sort of headline things that if you ask somebody in the street what do they characterize an actuary by, those are the sorts of answers that you might get. But in a bit more detail, first of all, what are the sort of more technical skills that you would learn at university? And it's pretty much the same as the financial mathematician. Of course, the detail of what you learn here is a bit different, and depending on the year of the undergraduate degree that you're taking, but it's the same basic content to a university degree. And then the sort of areas of work are life insurance as the one major area of employment, the pensions industry, so making sure that pension funds have enough money to pay the pensions that are being promised in the future, general insurance companies or non-life insurance companies, and then also the area of finance and investment. So there are a lot of different areas where you can work, and they're all very different in terms of the sorts of things that you might do. And indeed, within an a life insurance company, the types of work that you might do are extremely varied, depending upon your own strengths and interests. Now, an actuary can sort of be described, at least for many actuaries, that their job is being that of a specialised risk manager. And because of that, that's one element of being an actuary that differentiates it from the potential alternative career of an accountant. And it may be that some of you here today are thinking about actuarial as a career versus accountancy as a career. So contrasting the two, the actuarial career is one which is rather more mathematical, it's more specialised. An accounting career is still a numerics degree, but it's a lot less mathematical, but it's also much broader in terms of the range of businesses that you might work for. So one example is, suppose that you go to a life insurance company, you want to get yourself a personal pension contract. So when you have that contract, you'll have this for many years, 20, 30, or maybe even 40 years before you actually get to retirement. So during that working phase of your lifetime, you're going to be paying premiums to the life insurance company. And then once you retire, you're going to get a pension back from that insurance company. Or there might be a lump sum on death if you die before you actually reach retirement age. So where does the actuary come into this? Now the first part of this is really the sort of traditional idea of what an actuary does. It's all about working out mortality probabilities. So, or in this case, how many years are you going to live for on average? So that's part of it. How long are people going to live for? But you also have to think about a lot of other things. So what rate of interest are you going to earn on your investments? Are they going to grow at 2% every year, or maybe you'll be lucky and maybe they'll grow at 8 or 10% each year? Then you have to think about expenses and surrender options. And all of these things, they go into the melting pot, and the calculations that you're trying to do are, first of all, what is the appropriate premium rate in order to get your target pension? And then once the policy is up and running, then the actuary has to think about the reserve. So how much money does the insurance company need to set aside with the policyholder's name on it in order to be sure that the life insurance company is going to have enough money in 20 or 30 years' time to pay the benefits that have been promised. So there's simple to write down, but the calculations and the considerations that go into that are very complex, but also very challenging and very interesting for actuaries to do. So thinking now about the career and the career of an actuary. So what do you need to do to become an actuary? So the first thing is that, and this would be on completion of an actuarial degree, you would join what is now called the Faculty and Institute of Actuaries. There were a couple of years ago, or up until a couple of years ago, there were two separate bodies, one based in London, one based in Edinburgh, but they merged. So you would join those, and then you have to go through the professional exams. Now we'll come back to that in terms of how that links to university, but once you pass the exams, that's the point when you can you become a fellow of the Institute and Faculty of Actuaries, and that's when you can call yourself an actuary. Now, how big is the actuarial profession? So, as of yesterday, there were 10,784 people who were qualified as fellows of the Institute and Faculty of Actuaries, and out of that number, there's about 7,000 that live or work in the United Kingdom. So, the counterbalance to that is that it really is a UK-based profession. Is very international in its scope. So we have a lot of members who are working overseas, places like South Africa, Australia, and the Far East. And then where do all of these actuaries work? A lot of them, the majority, work for insurance companies, mostly life insurance. A growing number work in general insurance companies. Then we have consulting firms, where they have clients that they go out to rather than insurance companies, where all the work you do is for your own company. Consulting firms, they do actuarial work for their clients, and it's mostly pensions work. And then there are other career paths: government service, investment and banking, education, people like me, and then there's quite a decent number of people who have other types of employment, or that number might also include retired actuaries. Now, what about the exam system? So, to become a fellow, you need to go through the professional exams. There are 14 subjects, so it's not the easiest of careers to get into. There's a good number of exams that you have to get through, but of course once you get to the end, the rewards are very great. The good thing is that exemptions, so this is where the university degree fits in, the good thing is that exemptions are available for the first 8 of these subjects. So these are what we call the core technical subjects. So these are the more mathematical, university-based subjects, financial mathematics, probability, and so on. And then down at the bottom, the financial economics, that's the part of the degree, the part of the actuarial qualification that links most closely into financial mathematics as an alternative career path. So there's a lot of sort of mathematical and statistical content here, but also economics and finance and financial reporting. And these are certainly very important elements because they give you the wider business context that you might be working in, a better understanding of financial markets and so on. The next stage of the exam system is the core applications, and again, like the core technical subjects, these are compulsory exams. And these, essentially, what these try to do is, at least in CA1, is to pull together all of your knowledge that you've learned in the core technical subjects, but then to start to try to put them more into practice. And then we also have modelling and communications. So communication is a very important part of your career as an actuary, because it's no good being fantastic at the mathematics if you can't communicate the results of your work to your clients. So if they don't understand you, then they're not going to pay you for having done the job, and you'll very soon be out of a job yourself. Then we move on to the specialist subjects. So there's healthcare, life insurance, pensions, the sort of more obvious specialist subjects, and then we have financial and investment exams, general insurance, and the new subject of enterprise risk management. So in terms of the qualification, you need to take 2 of these subjects, and typically you would choose them to reflect the particular career path that you are hoping to follow. So suppose that you work in the area of life insurance, then clearly that you would certainly take the ST2 examination. But then you've got a bit of a choice, because there isn't necessarily an obvious second choice if you're following that career path. So it depends upon what your particular interests and strengths are. But enterprise risk management is a very new subject, but risk management as a discipline within actuarial work is very much on the rise, and really it is relevant to all areas of actuarial work. So, and that contrasts with all of the other subjects which are rather more specific to particular areas of work. So you take 2 of those, and then lastly, to get the fellowship, you have a single examination, which is really a more detailed application of the specialist technical subjects. So now what do we do at Heriot-Watt? The key thing is that we cover subjects CT1 up to CT8 as part of the degree. Just as importantly, it is what's called an accredited degree. So it's one of the relatively few universities in the UK that have this particular status, and it means that if you get a good upper second class degree, then you will be exempted from all of those subjects, CT1 up to CT8. So it's very much an incentive to work hard, get the best possible degree, because you'll not just get a good degree, but you'll also get a load of exemptions at the end. However, if you fall just a little bit short of that, you can also get individual exemptions. So if you do well in individual subject examinations, then you would get a single exemption from that particular subject. So if you're falling just a little bit below the good 2-1 category, you might still leave with maybe 5 or 6 exemptions out of the 8. So all is not lost. And when we're talking about that, the exemption is typically 60 or 70% in the examination, and that compares with the university exam, where the pass level is rather lower than that. But if you're focusing on an actuarial career, you should never be interested in the university pass levels. You should always be interested in getting 60, 65, 70% or higher in all of your examinations. So why should you become an actuary or a financial mathematician? First of all, because you enjoy mathematics. Next, because you're not hard studying required. You have to work hard at university to do well, to get the good 2-1 degree, and also just simply to get the most out of the lectures that are being given to you, so that you have a broad understanding of these subjects. But of course, once you've finished university, there's lots more of these professional exams that you still have to do. So, and of course, getting through those exams requires good discipline and hard work. So managing your time effectively. It's a good route to a career in finance and management positions. So even if you don't want to work in the more sort of mathematical type of career path as an actuary, You can go in other directions, which are more general management types of roles, particularly in financial institutions. You're genuinely interested in that type of work, although, as you'll have gathered, there's a lot of variety in the types of work that you might do. And lastly, the pay is excellent. And in particular, once you qualify as an actuary, the salaries are very good. Now, what if you come on the actuarial degree or the financial maths degree, and maybe you decide, well, after all that, I don't want to follow that particular career. The key point is that this is just as good a numerate degree as any other degree in more general mathematics or statistics. So you can follow a lot of careers: statistician, computing, insurance management, etc., etc. So these are all career paths that would be looking for people with numerate degrees. And then there are lots of other occupations where having a numerate degree is not particularly necessary. So teaching, police force, etc. And we even believe, I believe, have a police mountain rescue officer amongst our graduates of the actuarial degree. Now, how do we help in terms of your career development? First of all, we have very strong links with the actuarial profession, going back over more than 40 years. We have a good number of qualified actuaries in the department who are very actively involved in the affairs of the profession and examining the subjects, the education side, the research side of things, and continuing professional development. We have a one-year industrial placement scheme, so between the third and the fourth year of the degree, some students take a year out to go and work in an actuarial type of job, typically with an insurance company. And that's a very popular option, and everyone who goes on that placement comes back with very good stories about and a very positive experience, which also then helps them to get a job at the end of their fourth year. We have a specialised actuarial careers fair, so it's just for students on our degree. We have an award-winning careers service who, because of their 40 years worth of experience with actuarial degrees, they have a lot of experience of dealing and helping with our actuarial students. We have employers coming to give presentations. We have a lot of professional development planning throughout your degree. And we have an extremely successful student actuarial society. This is probably, or it's generally regarded as the best society at Heriot-Watt University. It's won awards, they're very well organised, and they organise a lot of events, which are some of them social events, but a lot of them are focused on helping students prepare for their future careers. As part of the degree, a lot of what we do is about developing transferable skills, so things like presentations, working in groups, solving problems, report writing, use of IT, CV writing, and this is a sort of career service type bit of support. And then also, finally, and this is thinking about the actuarial exams, that we have, beyond the core technical subjects, CT1 up to CT8, we also have a number of courses that we teach which link into the later professional examinations. So even though we don't, in the undergraduate degree, we don't offer exemptions in these subjects, we do have some courses that help to prepare you for those so that you can, once you leave university, you can hit the ground running. And then, lastly, where do our graduates go? And this slide just gives you a whole list of companies. Some of them will be household names like Standard Life and Aviva and so on. Or Deloitte's a very big, what's known as an accounting firm, but it also has a very large actuarial consultancy as part of its operations. And then, of course, there are lots of other companies that you might not recognise, and some of those are perhaps relatively small companies, but others are perhaps they're big consulting firms, but big consulting firms don't sort of hit your radar necessarily in the same way that something like the Royal Bank of Scotland would be something that you're much more familiar with. So there's graduates from this course are just all over the place. So with that, I will finish. I don't know if anybody has any questions at this moment, but certainly very happy to answer them.